Folks, welcome back to the Contrarian Trader. This is Robert Desmond. It is Sunday, February the 7th, 2010. Folks, sometimes some of the best advice I have to offer subscribers is fairly simple. It comes down sometimes to sending out a morning update on a day when the market opens up down like it did on Friday and just say, do nothing. Do absolutely nothing. Sit back and watch. That sometimes saves a lot of people a lot of money. Inaction is discipline. When you have a down day like we had on Thursday, and you have an employment number which the talking heads on Wall Street did a great job of prepping traders for to experience a bad report. When you have that type of setup in the making, you see the market open down, that's an invitation, especially on a Friday when you can expect to see short covering rallies going into the weekend. You can expect to see that rally get bid back up by buyers who are looking to get long, or short sellers who are looking to take profits. It's a good time to take profits, and that's a discipline that I try to teach my subscribers. Don't chase these markets in either direction. Be smart. Understand what's happening out in the market, and get ready and enjoy the counter trend rally. And that's what I like to do. And that's the information I sent out to our subscribers. I had a whole bunch of new subscribers sign on last week, and I get concerned sometimes because we have big profits. They see that we have big profits, and I don't want them to get that feeling that they're missing the boat. You're not missing the boat. You're not missing the boat at all. When you see a market sell-off strong, it only provides us with excellent opportunities to get long, and then you can enjoy that end. Or if you see a counter trend rally and it doesn't have conviction, it's at that point you can open up a short position. But you never chase a market in either direction. That's the discipline. Okay? And let's get started. Let's take a look at the charts. This is a weekly chart of the S&P 500. We have a market that found support at the 1050 level. This is a chart that we've used for a number of months now. We know this to be a support level and a resistance level at times, and we knew it was going to bounce off of here. The question is, can it hold it? I think with the price and volume action that we saw on Friday, I think that we'll probably see a continuation to the upside, possibly up to the 1100 level, and a pullback down for a retest at the 1050 level. If you see that rally to the 1100 level and then a pullback down to the 1050 level on light volume, that may be your time to get long and rotate out of some of these short positions, which we have plenty of, and get long. Do I think that this market is done selling off? No, I don't. Not in the long term, I don't. I think that we're going to see lower lows. We're positioned for it, and in my opinion, at this point in time, it's probably going to be a good time, this counter trend rally, to add to short positions and watch for that next leg down. That's just me, and that's just as of today. It could all change by the middle of next week. So we'll see. We'll take a wait-and-see approach, and that's our game plan. With regards to my anger with the establishment on the street, I want to go back to January 25th for a second. You'll remember I mentioned this last week about Cantor Fitzgerald's upgrade of the shipping index with a particular upgrade of DryShips on a valuation call. Now, what I like to do at that point is they put a price target of $8 on this stock. What I like to do is take a look at particularly on the shippers, and because this is the Baltic Dry Sea Index. We use this as our proxy on China, and we use it as our proxy on the shipping index. And it's the moment I heard this, I said, let me check out the dry shipping index to see what that looks like, because this upgrade doesn't look right. Because the last time I had looked, the Baltic Dry Sea Index looked to be getting weaker. And why would you want to buy the shippers when you have a breakdown on the Baltic Dry Sea Index? So that's what we did. And I told my subscribers, let's keep an eye on this. Let's watch these guys and see how good they're going to do. Well, we see that here's the the lower channel of the uptrend line of Baltic Dry Sea Index. You'll see that it broke below that rising uptrend line. That is not the time, folks, to get long of the shippers. Absolutely not. The time to get long of the shippers, perhaps, is to watch it pull back to the 23.63 level, see if it holds. If it pulls back on light volume, then you add to that position, and you can get long. That's your risk to reward. It's safe. You don't do it on January 25th when the Baltic Dry Sea Index is breaking down. In my own opinion, this is just another example of another investment house taking advantage of the general public. Do you have an account with Cantor Fitzgerald? I don't. How do I deserve that upgrade? Why are they giving me that upgrade? Do I pay them for that information? Is it valuable so-called information they're giving me? No. It's self-serving, in my own opinion. Their attorneys hate when I say this stuff. Because this is the truth. This is the hypocrisy. And CNBC, in my own opinion, plays along with the same game. Okay. That's my diatribe for the week. U.S. Steel. We have great profits here, folks. I sent out an alert to my subscribers on Friday. We saw it sell off down to the 200-day moving average. I sent out an alert. If you have profits, you're on margin, you need the money. No problem. Take your money off the table here. We're still short, and I think it's a safe bet that we're going to see lower moves on U.S. Steel. We may see a rally back up to this 47.50 level. That might be a good time to add to our short position. We'll take a wait-and-see approach. If we break out, we may just cover that position and take profits off the table. You had Tim Seymour on CNBC back here saying now's the time to buy U.S. Steel on fast money. Go back, check the tape. This is during this time frame here. We were getting short. We were short in the common back here. We were short in options, the put options back here. We were buying the March or April 55. Okay, March or April 55 puts. We made a ton on those. So please, don't listen to these people on TV. Please take advantage of my 14-day free trial offer. Join the Contrarian Trader. What do you have to lose? 14 days free. If you don't like it, cancel out. Most people stick with us, and we develop great relationships. And that's what it's all about. I get some emails. Emmanuel, I know you're watching. You send me some great stuff sometimes. It's just a great network of people. So please join the 14-day free trial offer. And if you have any questions, send me an email. Even if you don't subscribe, if you're thinking about buying a stock, you don't know which way to go, send me an email. I'll try to help you out. And for my members, stay tuned. I'm going to be sending out more commentary this evening. So please keep an eye on your email box. And I'll talk to you soon. Everybody have a great trading week and stay away from those talking heads and subscribe to my channel, okay? Thanks, folks. Bye-bye.